The Federal Reserve FOMC minutes meeting announced that they're unlikely to drop interest rates during 2023. We're going to go ahead and discuss this today, as well as looking at the charts, talking about the short-term structure on Bitcoin, a potential rejection that we're currently seeing, and obviously a larger time frame. Let's go ahead and jump into today's video. Okay guys, welcome back to the channel. Thank you for tuning into today's video. We're going to go ahead and take a look at Bitcoin in the smaller time frame, discussing the recent move towards the upside and potential rejection point that we're currently retesting. We'll also briefly look at the macro chart and discuss a few indicators there, and obviously talk about the FOMC minute meeting and what they plan to do with future interest rate hikes throughout 2023. Before we get started, smash the like button, hit the comment button, and of course subscribe to the channel. You can also get access to our Telegram channel, which is the second link down below in the pinned comments. Here it is over here, a bunch of updates, analysis, videos, information, everything you need, and a lot more over here. If you're interested in our VIP trading channel, you can see we do daily trade signals, exclusive altcoin analysis such as over here, such as up over here, heaps of different analysis in here, and of course our group chat, which you can get access to, and again, information is down below. Let's go ahead and get into it, guys. So we'll start with the market data, of course, first, and then we'll go ahead and jump in to the remaining analysis. So looking at liquidations, we're just under 100 million. We have seen a little bit more volume coming to the market in the last 24 hours, which is nice to see. Obviously, as liquidations rise, we do know volume has come into the market. We haven't seen volatility move at all. Volatility is still sitting around 1.42. And again, although we have seen a slight rise in price, we're still stuck within that horizontal range, a very tight consolidation still. And moving on finally to our quarterly and monthly, we're looking at 1.67 down from 1.7 yesterday. So not a huge change on the 24-hour price to price action, but again, within that 24-hour period, we have seen a little bit of movement and a little bit of volatility within those last 24 hours. Let's take a look at the broader markets. Looking at the DXY, we actually saw the DXY rally quite hard. And it did push through this resistance range, unfortunately rejecting back in, retesting the 103.8 and bouncing once more. Again, nothing is expected for the DXY to the upside unless we can remain above this horizontal resistance, okay? If we cannot remain above that resistance, we are more likely heading towards the downside. Of course, that will be bullish for the markets. If we do push above that resistance, we are pushing into these next resistance zones, obviously these green levels being trigger levels. This is of course bearish for the markets. Looking at the Dow Jones and S&P 500, we haven't seen a lot of movement in the last 24 hours. In fact, we've seen basically no movement whatsoever. The Dow Jones and S&P 500 has actually been less volatile than Bitcoin over the last 2 or 3 weeks. Bitcoin has been more volatile. We haven't seen a lot of price action. We've seen a $500 range here in the Dow Jones, and we've seen an even tighter range of about $150 max for the S&P 500 here, both of which are acting just within or below these resistance points, targeting these next legs towards the downside. Of course, towards the downside, targeting 32,000 here, and for the S&P targeting 3,600. For us to see any sort of move upwards, we do need to break out on the S&P, this downward sloping resistance, and break a new high. That will take us up to 4,300. For the Dow Jones, similar thing we're looking for. We're looking for a new high break over here, breaking through 35,000, sorry, which will take us up to 36.6. So at the moment, the downtrend is still remaining. And this is very prevalent across all markets, not only stocks, cryptocurrency as well. The downtrend is still remaining. I just want to reiterate one thing. A lot of people got a little bit confused from yesterday's video, because generally in most of our videos, we discuss bullish, we discuss bearish scenarios. We also talk about bullish and bearish indicators to give a broader sense of what is going on, and then we can make up our mind. But it's always good to make a plan. In yesterday's video, we lent a little bit more towards the bullish side. We're talking a little bit more about the bullish indicators. Now that doesn't eliminate everything we've been saying over the last couple months. It's just shining some light on some data we haven't considered as much within the last couple of weeks, and particularly in the last 24 hours. Okay, so just once we present a new piece of data and that data goes against the current bias, It doesn't mean we're flipping the narrative. What it means is we're taking a look at something that could potentially be beneficial to our decision making that we haven't considered yet. Because at the end of the day, guys, the more possibilities you're aware to, the more possibilities you're thinking about and planning for, the better chance of success you have, and the quicker you can react to shifts in the economy, and of course shifts in the trend direction, and therefore that's going to help you with your profit. So it's always good to consider bullish scenarios in a downtrend. It's always good to consider bearish scenarios in an uptrend, so when the trend does flip, you have a plan prepared and you can take action. So let's go ahead and take a look then at Bitcoin. Let's talk about what is happening on the Bitcoin chart. So not much in regards to our zones. We have seen again a little bit of a move upwards into this next horizontal resistance. This next horizontal resistance kind of makes up that POC level. The POC level being that red line at 16,820. Okay, the POC level represents, within the price range we're looking at here, the area or the horizontal zone of strongest resistance and stronger support. You could also consider it as the price point in which the most orders have been executed and placed. Okay, so we're looking at that being 16,820. We're slightly above it. So that's a good thing. We're slightly above it. At the moment, we are actually still in this downtrend. We are still within or below this downtrending resistance. Okay, so this downtrending resistance is our downtrend. We are still in it. As while we remain in this downtrend, we do have a chance to reject back towards the downside. So therefore, we have to be aware of what's going on. If we do reject here, and it does look like we are rejecting, because we have got a pretty large wick to the upside. Generally, when we see these large wicks after upward rallies or large wicks after downwards rallies, it generally indicates liquidations and liquidity. Generally, large orders and large moves occur after we see a liquidity wick. So generally, what we'll see is a large move to the upside. It will end with a large liquidity whip, stopping out a lot of these shorts, or tapping out a lot of people early, and then the trend will flip. And you can see it almost on every single large move. It generally always will end with a large wick. So that is a good indication that we could potentially see a reversal. Of course, at the moment, whilst we were in resistance, we do have to assume that the price will reject and will push back down. We're looking for a break above the $16,900 level to get that confirmation of a move upwards. I'd be looking for a 4-hour break. So a 4-hour break, more importantly, a 4-hour candle close above 16,900 will, in my eyes, confirm the next leg toward the upside. Where is the next move going? It would take us up to about 17,150 into this next horizontal resistance, breaking through there, of course, retesting that next one. Towards the downside, guys, if we do fail to break through here, it's very obvious what the next target is. The next target will be the uptrending support line, which lines up pretty well with this horizontal support range. Obviously, losing that range takes us down to 16,200. Losing that range takes us into the 15,000 range. And of course, if we do lose that range, we're going to new lows. We're going to go to 14,000. We're going to go to potentially as low as 12,000. Looking on the macro chart, where is that next support for Bitcoin? If we do head towards the downside, very obvious stuff, guys. The chart is telling us exactly what to look for. There's no hidden messages. There's no if, buts, and ands. The chart tells you exactly what to look for. Looking at the historical data, looking at the historical ranges, particularly the volume ranges, we can see exactly where we have had large amounts of orders in the past. And therefore, those areas are now more likely to be areas of massive support. And we can see the largest support on Bitcoin is currently sitting at around $12,000. The largest support on Bitcoin's chart in the history of Bitcoin is currently sitting around $12,000. That range begins at 13,900. What does that mean? It means the price can fly into this range, but as soon as it hits 13,900, it's going to be met with support. And that support extends all the way down to 12,000, and it gets stronger and stronger and stronger as we move towards the downside. What we could see there if we do move towards the downside would be a downward push followed by a slightly downwards consolidation before we reverse back towards the upside. That is a possibility. Moving from here, guys, towards the upside, like we said, we do have potential to move upwards here if we break through those resistances. The next major resistance we need to break through is, of course, the June to November bottom. If we do not break through The June to November bottom, we are not going to be moving upwards. It is as simple as that. The June to November bottom is a chance for this chart to reverse. We do have a very small chance over here that the macro chart can reverse. We talked about that yesterday. We talked about it a lot yesterday, actually. We even brought up a lot of indicators to show you guys what we're talking about. We are seeing a long drawn out consolidation, decreasing volatility, decreasing volume. At the end of a massive downtrend, we have a bullish consolidation. This bullish consolidation is a falling wedge. Unfortunately, one of the drawbacks of this pattern is that the whole falling wedge right now has not been validated, as we only have 2 points of retest on one side and 2 points on the other, and therefore this pattern could become malleable. And if it's malleable to change, it can invalidate this structure and it could continue towards the downside. So we do not have a confirmed falling wedge, but what we have is a potential to develop and create a falling wedge in a more confirmed structure, and therefore have that reversal occur. Towards the upside, we need to break through the downward trending resistance, okay? More importantly, we need to break above the POC level according to the VRPV at 19,200. Now, I did say 12,000 was the strongest support. Well, guess what? 19,000 is the strongest resistance on the chart for Bitcoin to date. Okay, so when we break through very strong resistances, they become very strong supports. For us to see any sort of reversal, macro reversal, 19,000 is an absolute must. If we don't break through there, we continue back towards the downside. That is an absolute must to see a reversal. So as you can see, guys, a lot is happening on the charts, okay? The short term is quite boring. There's no doubt about that. Ever since November 15th or whatever it's been, we've been in nothing more than what you can see here. If we go ahead and get rid of these lines, what you can see here is just a horizontal consolidation, essentially, guys. Very straightforward stuff. We've been pushing between these two trend lines, okay? Horizontal consolidation. And horizontal consolidations, again, are boring. They're a lot of chop zone. It's very difficult to trade. It's one of the worst trading environments you can actually have as a trader when it's horizontal consolidations, particularly when we don't have nice swings between our upper and lower supports. As you can see, we have had a few swings, but for the most part, we are just moving in this tighter consolidation zone. There's not a lot of volatility, and therefore there's not a lot of opportunity. But the good thing about this is, it is a very clear pattern. It's a very decisive pattern in the sense that when we do finally make a directional move from here, the directional move, for the most part, for a short period of time, will be quite an obvious move, and therefore it'll be a move we can capitalize on to a high degree of confidence, should I say? Okay, so looking for our break downwards over here of this green zone, we are confident we are going back down to 13,900, breaking above this 17,400. We're confident we're going to be retesting this red resistance zone. Both of these scenarios, some really good profits to be made on these gaps. Okay, let's go ahead and take a look at the larger time frame just one more time. Looking for an honest, reliable, and accurate exchange that you can trust to trade on, go ahead and sign up to Bitget with the link down below and join myself and all of our other VIP members and other members who trade on Bitget daily. There's a whole range of benefits and features you can actually get by trading on Bitget. These include no government regulations, meaning you can sign up from anywhere in the world. There's no KYC, 0% trading fees on spot, massively reduced trading fees on futures. It's one of the lowest in the game. And most importantly, access to their protection fund in case the exchange gets hacked. You can actually get reimbursed for your funds, so you can ensure your funds are safe. Now, most importantly, if you do sign up with the link down below, that first link, you'll get access to 2 additional features. These include access to a reward center where you can get up to $4,163 in rewards, and access to the MegaWhale exclusive referral link, bonus discounts. Every other month we do bonus campaigns. We get up to 10% off your trading fees, or even you get a percentage of your trading fees refunded to your account as USDT. Essentially, you get paid to be on the exchange. That's enough, guys. We'll get back into the video, and then I think we'll end the video. So there's a few things I want to talk about, and particularly I want to talk about yesterday's video in regards to yesterday's indicators in a little bit more detail. Because we talk a lot about technical indicators in regards to predicting trends, but more importantly, technical indicators are designed and used for definition or defining the strength of the trend, okay? So generally, technical indicators, although can be used as predictive analytical tools, for the most part, with a lack of understanding of how they use, if you don't have a very high degree of understanding on use, and you don't have an ability to foresee how they could potentially respond and react and develop over time, they are generally more descriptive, okay? So when you're doing an analysis, descriptive indicators can tell you what is, okay, not what will be. So it's very important when we look at these technical indicators, such as ones yesterday, when we have decreasing volatility, we have decreasing volume, we have sideways consolidation as the price develops a descending wedge, which is a consolidation pattern which is slightly pointing towards the downside with two parallel trend lines converging. It is natural for us to see momentum start to drop. If we're in a downtrend, it will be natural for us to see bullish momentum start to fall, be natural for us to see selling pressure start to fall. These are descriptive indicators. What do these mean? Well, they can tell us what can be, but not what will be. So it's very important to understand that. Just because we start to see bearish momentum fall, just because we're starting to see bearish volume fall, just because we're starting to see volatility, volume, and compression occur, it doesn't mean the reversal is confirmed, okay? Very important to understand. I feel like a lot of people got confused about that yesterday when we started talking about more bullish scenarios. And again, guys, this is exactly what I was saying at the absolute top. I said these lagging indicators, although are great descriptive tools, they're not going to tell you when the top is. We have to look at the structures. So when you're looking at stuff like this, the best thing to look for are your horizontal ranges, your historical volume ranges, and your structures, as your structural breaks will determine the direction of the trend, and the technical indicators will tell you how strong that trend is going in that direction. And if it's a strong trend, it's more likely to continue in that direction. But the direction is not determined by the indicator, okay? The indicator does not determine the direction. It simply reflects the data of what the direction is doing. So we do not use technical indicators to predict where the price is going, as they are not linked. It is descriptive, it's not predictive. Very important stuff, you understand that, guys? It will help you in a lot, it'll help you out a lot. Now there's one indicator, however, that does slightly bend the rules. And those are momentum indicators, particularly the RSI. The reason why the RSI bends the rules a little bit is because it doesn't directly reflect price action, okay? So a lot of indicators that rely on moving averages reflect price action. They directly depict what is happening on the price action within that moving average. The RSI is a little bit different because it doesn't reflect the price action. It reflects the speed, velocity, momentum of what is occurring on the charts. So it's somewhat linked to price action, of course, because if it wasn't linked to price action, the volatility, the speed, and velocity of the price action wouldn't create the RSI. But it is linked to a lesser extent. So generally we see the RSI develop, move, and form structures that are not so necessarily present on the price action charts. And this allows us to witness and, more importantly, determine points of discrepancies in price action and momentum, because what drives price is momentum. So if we can notice a discrepancy between the two, we can therefore take a look and have more or less predict what is going to occur with the price action, whether or not we get a positive shift in momentum or we get that negative shift in momentum based on what the structure is saying. For example, I'll give you an example. If we have a downward trending resistance and the price action is doing something like this, okay? And then on the RSI, we have a downward trending resistance such as this, okay? But imagine the RSI broke through. So we're currently sitting like this. We have the price action below, we got the RSI through. What does that tell you? It tells you we have a higher probability of the price action breaking through this resistance zone on the next test, as we have had a positive shift in momentum. I'm going to leave the video, guys. If you've got any questions, leave them down below. I hope you found this one informative and obviously beneficial. And guys, make sure to join that Telegram channel. We do a lot of awesome content in there. You won't miss anything if you're in there. And we'll see you guys in tomorrow's video. Cheers.